All right, so in this video, we're going to be talking about what is external and internal range liquidity. Okay, so starting off, we're going to use this USD JPY right here, and we'll look at a few different examples to solidify your understanding of the concepts. But here's what you need to understand here. So in USD JPY, you can see we have a price range right here. See how we have this price range? Look at this. Like take your swing low right here. See how you have a swing low, your lowest low in the middle, where my cursor is moving. Then you have a higher low on the left, you have a higher low on the right. And then it ramps up all the way up into here where it puts in a swing high. You have your high sign in the middle, lower high on the right, lower high on the left. This makes that one price range right here. This little surge up that you see right here, that makes that one price range. So what you're going to do is you're going to mark the low of where we just did that swing low was at right here. That's a swing low. It's the absolute low of this price range right here that was just formed on the daily chart. And this right here, the swing high, is the absolute high of that price range. What you need to understand is this is external range liquidity. Okay. So I want you to think of it like this. External range, just think of the name external. What does that mean? Let's unpack that. What does external mean? On the outside, right? This is the very end. It's the outside. It's the very end of that range. That makes it external range liquidity. This makes it this. Remember, this is an entire price range right here, an entire price range, and this is the absolute end of that price range. That is external. Okay, that is external range liquidity. Now, what is internal range liquidity? What does that mean? Well, I mean, look at the name, internal range liquidity. It's inside, right? So your internal range liquidity is going to be represented with your imbalances. So you have a bearish imbalance right here that you can see was formed after this day was closed. Now you need the 3 candles to close right here. Boom, that happens. You have an imbalance right here. And that is internal range liquidity. This is an area that was not efficiently delivered on the price action. Okay, which makes it an imbalance. It's a draw. So what happens next? It comes down and it takes out, it sweeps, gets rid of that external range liquidity right here. Okay, you can see it sweeps that level, it comes down and it takes it. Now, and the thing is, you can use multiple time frames to do this. All right, so you can use various time frames to really dial down your entries to establish profit targets whenever you're using external or internal range liquidity. But also, it's very important that you have a firm understanding of market structure when you're doing this. Okay, because having a firm understanding of market structure is very, very important. Because yes, this took out this low, but it's also bearish market structure that is doing this. So you can see USD JPY, it was trending lower, trending lower, trending lower, trending lower, trending lower, and it took out that external range liquidity right here that we were just talking about on the daily chart, that higher time frame liquidity. So we took that out and it swept that level. Now, look at what was created as soon as it came down. And it did that. Yes, we got on the day. I'm fully aware we get on the daily as well, but you can use the 4 hour to dial it down even more, to be even more precise and to establish like a profit target. Okay. Because you already know you're taking out this. And now what it left behind right here with a 4 hour imbalance. Remember what I was just saying? This is a draw on liquidity. It is internal range liquidity. You took out external, you left behind internal, okay? Because this area was not efficiently delivered. It is an imbalance, and price doesn't like to leave areas like that. So it takes out this. It's already took care of that liquidity right there. So now it wants to seek what? It wants to seek internal because it already took that out. Why does it need to move lower now? It took out that liquidity. Now it wants to seek the internal. Now it's bearish market structure. It's bearish market structure, but it's still price wants to gyrate. It wants to pull back. It wants to move back within the range. Okay. And you can capitalize on those moves. I'm not saying you gotta, fight the trend. The easiest money is with going with the overall trend, no doubt about it. But I'm pointing out the opportunities for you in here and I'm showing you the potential. Okay. And here's what you need to understand. You take out that external, you get internal up here. That's opportunity. That's opportunity because it wants to move into that draw here soon. So what can you do next? Well, then you can utilize a lower time frame chart to pin down your potential entry in there. Okay. So now we're on a lower time frame. You can see we already took out that external range liquidity with this horizontal blue line right here. We came down, boom, we took that out right there. And we left behind that internal that we were just talking about on the 4 hour chart. We have that higher time frame outlook right there that it still has yet to tap into. So what can we do now? Well, now we can go to a lower time frame chart. And then guess what? Even on this lower time frame chart, you have the same exact signatures, guys. Price is fractal. What occurs on one time frame occurs on another. Remember, like external internal range liquidity, you got on the monthly, weekly, daily, 4 hour, 1 hour, 15-minute. You get it. You get the gist. 1 minute. Like you have it. Yeah, like you have these price ranges, these established price ranges on every single time frame. So really think about what I'm telling you here. So if you can utilize a lower time, you have the higher time frame outlook, you have that internal range liquidity, you understand that's serving as a draw already. Now you can drop down to a lower time frame and having a firm understanding of market structure, external, internal range liquidity, which you'll leave away with at the end of this video. By the end of this video, you're able to capitalize on these inefficiencies in price, because that's all we're doing at the end of the day, guys. Us traders, our job here is to capitalize on inefficiencies. Okay. And right away, you have an inefficiency right here that you've already identified being that internal range liquidity. You took out external, it's done with. But now it wants to seek internal, and we've already identified that. And now we drop down to a lower time frame using our knowledge of market structure to capitalize on that change in trend, to take it up into that draw, to take it up into that inefficiency, that internal range liquidity. So where do we have a market structure shift in here? The actual market structure shift was right here. You can see this is where we made the absolute low right here. Look at my cursor, follow my cursor. We make an absolute low right here. It comes down, it takes out the lows. And then it has this move up higher, which is your market structure shift. It took out daily liquidity already. It took out that liquidity, which is essential to a high probability market structure shift. It takes out this short-term high right here. And then it pulls back within this range. Not only does it pull back, it pulls back into a discount marketplace. Look at that. We get a shift, and then pulls back below 50% equilibrium, which is a discount marketplace. Think about what I'm telling you here. You are now identifying a change in trend on the lower time frame right after taking higher time frame liquidity. Think purge or revert. It purged higher time frame daily sell side. It reverted to upper buy side, which is your shift in market structure, while having, may I remind you, your internal range liquidity up above. Yes, you got a daily in there as well, but again, we're using this one to kind of dial it in, to be a little bit more precise here and show you how you could like day trade this, capitalize on this opportunity. Because you're taking out this liquidity, you know it wants to seek this now because it's internal range. It takes external, moves to internal, goes to internal, seeks external. And remember, we're talking about bearish market structure here. That's going to be the case. So we have this internal range liquidity up here that it's seeking because it's a draw. It's inefficiency. It was inefficiently delivered in here. Okay. And now we get a change in trend right here while leaving that inefficiency. So you're able to capitalize on it because we have a change in trend right here. And then it pulls back into a discount, which is what you want to see. Think of it like price had a chance to breathe. Think of it in just a simple manner like that. It gave price a chance to breathe because it came up and took out this what right here. It took out this what? It leads into external range liquidity. See what I'm getting at here, guys? It occurs on every time frame. External internal range liquidity is found on every time frame. And you got this push up right here. This push up took out external range liquidity, which is right here, because this is the absolute top of this price range. Just right here. Look at this, guys. Pay very close attention. This is your swing high right here. This is the absolute high of this price swing. See this? Then it had a sell off all the way down to this. This is the absolute low of that price swing. That is one price range right here on the 15-minute chart. Look at my cursor. Look at where it's moving. Top to low. Top to low. That makes one 15-minute price range. So when we come up right here, what do we take out? On the 15-minute, just focus on the 15-minute right now. You're taking out external range liquidity. Remember, external on the outside, it's at the very end. You take out that swing high right there. It's external range liquidity. After you take that out, what does it want to seek next? Because when it takes this out, yeah, we understand at this point that we have that 4-hour draw up above. We have the inefficiency up above. That is our higher time frame outlook. We want to see it drop into that level, right? But do we really want to just buy a price that's ripping up like this into this high right here? No, we want the best price we can get. We want a discount marketplace. And we understand now that it's taken out this external range liquidity, it wants to seek what? It wants to seek internal range liquidity next because it already swept this level. So it now wants to go lower and seek that imbalance. Where's that imbalance? Right here in a discount marketplace. Look at this. It tapped down to it slightly right there. The first time around, it found support, ramped up, took external, and after it takes that external, it seeks the internal in a discount marketplace within that price range. Remember, because it all connects, guys. You can see like all of this in regards to like the ICT concept, it connects like this premium, the discount, the market structure, external, internal range liquidity. It all connects to make one big picture. Okay, that's why like it's important to have an understanding of this, because you can see then it pulls back into a discount and it seeks that internal range liquidity in a discount after taking that external. See that? And keep in mind, at the time that we're doing this, we still have that draw liquidity up above. We still have that higher time frame 4-hour inefficiency. We already took out daily sell side, aka external range liquidity. And now we have a change in trend right after taking that external range liquidity in a discount marketplace on the higher time frame with a higher time frame draw up above. So you already have this outlook going into it. Now you get a change in trend. It comes down into the internal. This is your chance to enter. This is your chance to enter into that internal range liquidity. That's your opportunity to get in. Okay. And yes, you could take profits as it comes up into external range liquidity, or maybe take a partial, or you could hold all the way up into that imbalance up above, because that's internal range liquidity. We understand it's going to want to drop into that area because it was not efficiently delivered. Okay. And that's what happens. And you can see it rips up and ends up drawing up into that internal range liquidity. Now, here's where market structure comes into play. Again, because you're not really shooting, like swinging for the fences like this since it's bearish market structure, okay? Because now, what did I just tell you a second ago? Well, now that it's tapping up into that internal range liquidity while operating within a bearish market structure, it's probably going to want to see what in the near future? It's going to want to see a move lower, a deep move lower. It's going to want to come lower because it's bearish market structure now tapped up into internal range liquidity. And you can see it has a rejection off that internal range liquidity because it serves as resistance. All right, so it pops up into this internal range liquidity right here. See this? And that's why we found resistance. And you can see eventually it comes all the way up and it rebalances that price action completely. It completely rebalances that internal range liquidity on the 4-hour chart. And then the other day from the news, we actually had a big sell-off from the high impact news yesterday, which created this new condition for us. I was actually originally bullish on a little move up to take out this high right here. But then the news, the news kind of ruined those plans, right? Now, if we just fast forward a little bit, we have another example here. So this is this morning, or actually on Sunday, what we saw was we had that big flush from the news, as I was just saying, and it came down and it took out this low again. So it's still bearish overall, as you can clearly see. But guys, think about the same thing I was just telling you. It left behind an imbalance and it took out this external range liquidity. Look at the absolute low right here. See the absolute low right here at this very point where I have this horizontal blue line noted. We took out that low. So we took out external range liquidity. What does that mean? We enter a deep discount marketplace when we do that. And we leave behind a imbalance right here, which is internal range liquidity. Because this area, due to the news yesterday, that high impact news that sent this thing lower, it was not efficiently delivered because it was just too extreme. It was too fast. So it didn't get a chance to. It's bearish. As you can see, it came up into that imbalance and it respected it because it's internal range liquidity. But same deal. Once we take out this low right here, there is opportunity to capitalize on this inefficiency in price. You could take it from external to internal up here. Again, you take it from external to internal. You have that higher time frame outlook. Now here's where we're going to get a little bit deeper into it. There's another way to go about doing this. So you can see right here, price is moving lower. It has this sell off right here. This is when it's taking out the low on Sunday, or it's making new lows on Sunday. It looks very bearish in here. I want you to notice this. Let me go back to replay mode real quick, just so you can see it. It'll make it a little bit easier to read. You can see it's making new lows on Sunday. We've already taken out that external range liquidity I was just talking about, and it's continuously making new lows in here. See how it's making new lows? It makes a new low right here. It ramps up. It seeks this internal range liquidity on the 15-minute chart, and then it sells off and it seeks external. Okay, every time frame it does this stuff, guys. Every single time frame, because price is fractal. Sells off, leaves internal while taking out external, and then comes up, seeks the internal, seeks external again. It's making a new low, and then boom, it rips up. And we leave an imbalance right here, which it didn't quite test. This is internal range liquidity, but it didn't quite test it. But here's the deal. I want you to pay very close attention. That's not the only thing we got in here. That's not the only thing we got in here, guys. You also have a breaker block in here. See this? That counts as well. Your breaker blocks, your order blocks, all that counts as well. Okay, so even though it didn't tap down into this, it pulled back into your breaker block, and now that is your confirmation. Remember, it's the same exact thing I was talking about earlier. You got the draw on liquidity up above. being this imbalance. That's your internal range liquidity. You already took out external, left behind internal. This is now a draw on liquidity. And then you can utilize the lower time frame change in trend to capitalize on the inefficiency in price. Okay. And then you can see it comes down. It tests your ICT breaker block. All right. We test internal range liquidity. And then we come up and we seek that external range liquidity right there. And there's opportunity in that. And then you can see the same thing right here. After we came down and we got that push up from the breaker block, it took out this high right here. And also for any of you that are not, because I know I might be losing some of you when I say like breaker block and all this stuff, I'm going to leave a few links in the video description of this video. Okay. I'm going to leave a link to breaker blocks. I'm going to leave a link to fair value gaps, because like all these imbalances that I'm talking about, which is your internal range liquidity that I'm always talking about in this video, like I'm going to leave a link to that in the video description as well, so you can have a firm understanding of that too. Okay. So after you watch this video, go watch those and then come back to this, watch it again, and it'll make perfect sense. So what I'm getting to on this. So you can see we come down, we found support off the breaker, we ramp up and we take out external range liquidity in the 15-minute now. Okay. So it's in a short-term premium whenever it does that. But even while taking out this high right here in a premium, we still got to draw liquidity up above being this higher time frame imbalance, that internal range liquidity. So we're taking out external on the 15-minute. It comes down and it seeks internal, which is this little 15-minute imbalance right here. It seeks internal. After it seeks this internal liquidity on the 15-minute, what does it do next? It seeks external. Look at this push up and just follow my cursor. Follow my cursor. It comes up and it seeks external, because right here we have this swing high right here. It seeks that external. After it does that, what does it do? It seeks internal. It comes down and it rebalances this little 15-minute fair value gap you see right here. And then it comes all the way down and ultimately gives you that pullback into a discount. Okay. It rebalances that price action down below, and then it ultimately comes up and it seeks that higher time frame internal range liquidity. Lower time frame change in trend, you can capitalize on that to take it up into the inefficiency. Every single time frame it happens. Okay. Every single time frame. And you can see how having a firm understanding of all this stuff, like the internal, external, having a firm understanding of premium and discount, your imbalances, market structure, all that stuff is essential to having that firm understanding of it, because it makes like one complete picture. And then you can see after doing that, after seeking that internal range liquidity, you can expect a big retracement in the future off that, because it's a higher time frame level. And then it takes the low. Okay, so let's bring back up this Nasdaq real briefly. I was talking about it the other day in my breakdown. I'm sure a lot of you watched, which is actually the most recent video I put out on the channel. But it ties in real nice to this lesson as well. So you can see Nasdaq the other day, as we were talking about, we had this sell-off right here. And this sell-off took out external range liquidity. Okay, because you can see right here, see how we took out, like, we have one price range right here. This is the price range. Look at my cursor. Look where it's moving. We had this price range that was created right here. And then you can see how price tanked and it took out the low of that price range. That is external range liquidity. Why? Because it's the very end of that price range. It's external. It's on the outside of it. Okay. So we took out that external range liquidity and it moved lower and it came down and it found support off this order block right here. See this? Now, when we do this though, whenever we're taking out this external range liquidity up here and we're selling off like this, what does it leave behind on this chart? What does it leave behind when it does that? It leaves behind an imbalance, which is your internal range liquidity on that sell-off lower. See that? So you can see it comes down, took out external, left behind internal range liquidity, because this area, like the selling was too extreme. It was too fast. So this portion of price was not able to be efficiently delivered. And that's very useful information going forward, because then you could look for lower time frame scalping opportunities to capitalize on the inefficiency in price. Because as we understand, we know price is going to want to seek that internal range liquidity because it took out external. Now we're testing the level of support. It's going to want to seek that in the near future. It's going to want to pull back and efficiently deliver that price action. And you can see this is that sell-off that we saw. We get to sell off at the bell, which is your 9:30. This is that little turtle soup at 9:30 that happens. And then it comes down into your level of support. Keep in mind at this time, we still got the internal range liquidity up here serving as a draw. They didn't go nowhere. And then you can see we get a change in trend right here. We get a nice push up. We get a shift in market structure to the upside. It came up. Look right here. Look at my cursor. Look at my cursor right here where it's moving. See how it took out that high right there? This is one entire price range right here. Look at this big leg lower on the 1 minute chart. What is the high of this price range? What is that called? Internal range liquidity. Absolutely. It's internal range liquidity. They kind of clean it up a little bit just so I'm not to eliminate any confusion here, you can see right here on the 5 minute, look right here. It's selling off, selling off, selling off. You have this high right here. So it comes up and it takes that high, takes the high of that price range, which is external range liquidity. And what does it leave behind when it does that, guys? Whenever it takes that high right here, it leaves behind an imbalance once this candle closed right here coming into 950. Look at this. Pay very close attention, because I'm not only showing you like what internal and external range liquidity is, I'm showing you how you can capitalize on it, which is the important part. A lot of people will talk about it, will say this is what it is, boom, that, you know, quick, done with. But I'm actually showing you how you can capitalize on this stuff, how you can actually capitalize on external and internal range liquidity in depth. So you can see we have that draw up above that's still left intact. Just to, let me go back to replayed, so I know some people are going to get lost in that stuff in the right. So just to kind of keep your focus here, we ramp up, we take out external range liquidity. Right there, boom. It creates an imbalance. After taking out external, it leaves an imbalance. That's internal range liquidity. It's inside of this price range. This surge up created a new price range. And inside of that price range, you have internal. Inside of it is internal range liquidity after taking external. It takes external, it seeks internal. It seeks the internal right here. And keep in mind, you still have the internal range liquidity on the higher time frame, which gives you that higher time frame outlook. It gives you that draw. It gives you that draw on liquidity. And then by utilizing the lower time frame market structure, by utilizing, you know, the lower time frame understanding, or having an understanding of internal external range liquidity, you can capitalize on these lower time frame retracements and capitalize on the move up into that point of interest, because you're just capitalizing on that change in trend here. It seeks internal, it rebalances it, and now it wants to do what? It wants to seek external. The high of this range is external range liquidity. Look right here. Look at my cursor. Right there's the external, okay, and then external, okay? It seeks it. It ramps up and it seeks that external range liquidity completely. Comes up and it takes it. It sweeps out those highs. It rebalances. Now that it has done that, what can it do now? Now that it has rebalanced that price action, that draw on liquidity, it can now do what? It can now seek external range liquidity. It pulled up into a premium within this price range. Fibonacci from high to low. It pulled up into a premium when it did this, and it rebalanced that internal range liquidity. So now it can seek external once more, from internal to external, from external to internal. It repeats. Now we have the low of this range. This is the absolute low of this range, is external range liquidity. Okay. And then you can see what happens next. It sells off. And we actually got the entry pattern on the 1 minute chart on this. So again, you have this understanding that it's already rebalanced that price action, that internal range liquidity, and you're trading with the trend until that we had a change in trend later, but the time that this is happening, you're trading with the trend as well, which is where your best plays are going to be. It's always best if you trade with the overall trend. I've used some counter trend trade examples in this video, just kind of to give you an understanding of it, but the best plays are aligned with the trend, and I'm going to show you that with this example. You rebalance that internal range liquidity, and now you have this external range liquidity down below. See this? External range liquidity is right there. Remember, this happens on every time frame. What do I mean by that? Because you can see right here, we came down and we took out a swing low right here. See that? Look at my cursor. Now, don't forget, we do got the higher time frame outlook, but right here, we come down. We have our lowest low in the middle, higher low on the left, higher low on the right. It comes down and it takes that swing low. That's external range liquidity right there that it took out on the 1 minute chart. Because remember, price is fractal. This stuff occurs on every single time frame. So you take out external, and then after you take out external, what do you look for next? You look for it to leave behind internal range liquidity, which gives you a place to enter. And because you're trading with a higher time frame trend, you waited for that pullback. It already rebalanced that internal range liquidity right here, and you're utilizing time as well. You're able to target that external range liquidity on the 1 hour chart, because that's your higher time from, like, I'm looking at it for like a scalping scenario, the higher time frame outlook here. You're going to look for it to come down and take this. But then to time your entry to get more precise, it takes external. Do you want to just short as it's taking out external range liquidity right here? Do you just want to short that breakout? No. You want to wait for it to retrace into internal range liquidity to get your entry. It retraces into and rebalances that internal range liquidity. Now it wants to do what? It goes from internal to external. Now that it's rebalanced that, it can seek external range liquidity right here. There's external range liquidity. That's the very end of this range. It does what? It seeks that external range liquidity. All right. And then it leaves behind a little imbalance. It retraces up higher. And then ultimately it takes out that external on the 1 hour. Because remember, that was our outlook right there. We had the low of this price range. that was put in, like this below the price range was put in, then it came up and it rebalanced an internal range liquidity. Now it could seek the external because it was bearish at the time, and you're trading with the trend. So you were able to do that. You're able to get plays like that. That's what you saw play out. Takes the external range liquidity and it repeats. So I think that about covers the video. I don't want to make it too long. I think it's already quite long, but hopefully you got some value out of this video. If you did, leave a like, subscribe to the channel, and I'll catch you later.